Hi everyone, this is Rohit Khatri from Mirae Asset Capital Markets. I cover the auto and auto ancillary sector over here, having nearly a decade of experience in the industry. To give a brief background, the auto ancillary sector is one of the crucial sectors in India, contributing nearly 7% of India's GDP and 49% of India's manufacturing GDP. However, over the last couple of years, rather I would say that the industry has seen some tumultuous time, especially since FY19, owing to several reasons, including cyclical slowdown, regulatory changes with the likes of BS6 emission norms, safety norms, and lastly the COVID-19 pandemic as well. Even the shortage of semiconductor had an impact on two-wheelers and passenger vehicles. However, in the last 2 years, we've seen good recovery in the overall industry, led by the overall economic recovery as well as strong pent-up demand as well as easing supply-side issues. Coming to the segments, there are three key segments in two-wheelers in auto industry. First is two-wheeler, followed by passenger vehicles, and third is the commercial vehicle side. Coming firstly to two-wheelers, so two-wheelers basically is the largest industry by volumes, constituting nearly with an annual yearly volumes of 21 million back in FY19. If we look at the breakup, 63% of the volumes actually comes from the motorcycle segment, 35% comes from scooters, and around 2% is for the mopeds. The industry volumes had declined for 3 consecutive years, before recovering in FY23. They recovered to around 17%. Even this year itself, the growth has been quite decent at around 6 to 7% for the industry. However, going ahead, the factors, at least if I look at the overall volumes, they are still lower by around 25% than the previous peak. In the next 1-2 years, what we believe is that the growth will continue, for two-wheelers aided by low base. As I said, 25% we are still off the previous peak. Plus, there are positive factors like increasing rural income, economic growth rate recovery. In the medium to long term, once the base normalizes, we expect that two-wheeler industry growth would moderate. One of the primary reasons being that household penetration of two-wheelers is very high in India. It's around 53 to 55%. Even though it has potential to rise from here on, but we believe it would happen gradually. Therefore, in our view, we believe that premiumization would be a bigger trend to play in two-wheelers, as nearly 75% of the motorcycles sold in India are less than 125cc, which leaves immense scope for growth in the premium segment. Another trigger is the exports volumes, which has seen a decent amount of decline over the last 1 or 2 years, owing to macroeconomic challenges in some of the key markets in Africa. However, with all these inflation concerns abating, we believe we should see gradual recovery. In addition, most of our products are in two-wheelers are now globally compliant in terms of emission, in terms of safety as well. Moreover, with the immense growth opportunity in the premium side, domestic players over here have also increased their premium portfolio, which would provide a huge opportunity for exports in coming years, not only in developing markets but key developed markets as well. In terms of EVs, two-wheelers are primarily seeing EV penetration in scooters, which is roughly around 5% of the entire industry comes from EVs. This we expect to gradually rise over coming years as the total cost of ownership improves, and also the awareness amongst people also improve. So overall, yes, a gradual industry growth prospect plus premiumization being a bigger play, gradual increase in EV penetration would be a key thing in the two-wheeler space. Coming to the passenger vehicles, this industry has had very strong growth over the last 2.5 to 3 years. aided by strong pent-up demand, shift to personal mobility, and easing of supply-side issues. India seems to have followed the global trend of increased preference for SUVs, as it sees very strong demand in the post-pandemic recovery. Just to give a number, UVs now command around 60% of the market as compared to 30% in the last 3 to 4 years back. So the PV industry provides immense long-term growth opportunity in India specifically, given that we are very underpenetrated in terms of number of cars per household. India is at around 8% versus US is at around 90%. So the long-term growth is definitely there, which would be driven by rising per capita income and rising aspirations. We are in the third year of the upcycle for the industry, and usually cycles in PV last for around 3 to 4 years. But one good part is, the cycles are not usually as sharp as seen in other segments. So the down cycles are not that, impactful for the industry. So PV volumes, if I have to just give a number for last 30 years, have only declined 6 times in the last 30 years, which clearly signifies that there is less volatility in this market. Another opportunity again is exports, which is hardly around 15% of the overall industry volume, and players are increasing their presence globally. Once again, a key thing would be we are now at par basically in terms of global standards of emission. So we now have BS6, which is equivalent to a Euro 6. In terms of EVs also, we are at around 2% of our volumes come from electric vehicles, which we expect would gradually rise as more models comes in, the charging infrastructure in the country improves, and also the total cost of ownership, because right now the cost between EV and a normal passenger vehicle is quite substantial, and the TCO does not work in favor for the passenger vehicles, and that's the reason we believe it would be a gradual rise from here on. So in India, the government believes that 30% of all passenger cars sold in India would be EVs by 2030. Coming to the commercial vehicles, this, which is heavily dependent on the economic activity, has also seen very strong growth over the last 2 years, aided by recovery in the economy and increased government expenditure on social projects like roads, housing, etc. This industry had also seen a very sharp cyclical downturn between 20 and 21 because of COVID. But yeah, we expect the growth momentum to continue for the industry in the long term. But one should be cognizant of the fact that CV cycles are usually last about 4 to 5 years, and we are in the third year of the upcycle for the industry. So nonetheless, the current trends definitely suggest that demand remains firm, and early indications also suggest that the down cycle may not be as severe as we've seen in the past cycle. But in the long run, increased thrust of government on infrastructure and increase in economic activity or economic growth-led recovery would drive growth for the industry in the long term. Now coming to the financial performance, all of these volume trajectory needs to ultimately translate to a better financial performance and profitability as well. What we've seen is in the last cyclical downturn, the industry had struggled for finances in terms of operating margins were impacted because of regulatory changes, safety norms, and commodity costs getting way out of hand. So all these had put a lot of strain on their margins as well. But slowly and steadily things have started to turn around for them as well. We are seeing very strong growth in terms of revenue. One key driver for revenue has been, of course, one is the volume growth. The second aspect is the realizations as well, because of the price increase, and of course because of the better mix as well. As I said, two-wheelers are also seeing premiums trend doing well. In passenger vehicles also, UV segment or the SUV segment has started to do well. So all these have aided better mix for these companies, which has led to much better growth in realizations as well, which is leading to higher than estimated sales. On the margins front as well, the recent easing in commodity prices coupled with the operating leverage which starts to play out once your volumes recover, has also resulted in very strong growth for profitability. We believe the sector is well poised for growth over the next 1 to 2 years. In addition, margins improving for most OEMs would also lead to higher profitability in the coming years as well. The long-term growth trajectory, as I said, in two-wheelers is mainly may not be so much on volumes, but premiumization would be a bigger trend to play. But in passenger vehicles, low penetration is definitely would drive growth with rising per capita income. Bodes well for India's growth in terms of passenger vehicles. So all segments, as I said, could potentially do well. Plus, exports are a huge opportunity for all players. Key risk, some of the key risks which I would highlight for the sector would definitely be commodity prices, as past instances have shown that these domestic players have not been able to fully pass on the price increase. The second bit would be the competitive intensity, because where there is growth, there are more players starting to get in as well, which has intensified the competition in the entire industry. So overall, yeah, this is our perspective on the entire auto space. Thank you.